And welcome back. Some odd dynamics are happening right now in the US housing market. So for example, based on the most recent data we have, new listings have been decreasing on a year-over-year basis for 44 consecutive weeks. However, there's still approximately 30% more houses for sale right now compared to last year, yet we're still well below pre-pandemic levels for housing inventory. We have a very unique housing market to say the least, so in today's video, I'm going to give you guys an update regarding home prices, housing inventory, price reductions, and of course, much more. Also, stay tuned toward the end of this video because I'm going to provide some context regarding what may lie ahead regarding our US housing market in the months ahead. So thank you so much for joining me in today's video. I appreciate you. So today's video is based on my own analysis of Realtor.com's data. They provide a weekly housing market update on their website here, which again, I did not even read because I'm a total nerd. Instead, go to Realtor.com/research/data, and it takes you to this Excel spreadsheet more or less. So let's talk about asking prices compared to 1 year ago. The most recent week they have for us is for the week ended May 6th. So asking prices only increased by 2.4% compared to the same time frame in 2022. By the way, all these figures here is based on year-over-year percentages or year-over-year changes. What's interesting about this change, a gain of only 2.4% in asking prices in the US here, is that this figure here has been flat for about a month. On top of that, at a gain of 2.4%, this is actually the lowest gain going back to May of 2020. Also, to give you guys some context regarding pre-pandemic levels, during this same week back in early May 2019, we saw an increase of 6.7% year over year, whereas this year, we only saw a gain of 2.4%. On top of that, we've been seeing single-digit increases of asking prices for 21 consecutive weeks. I mentioned that because for the previous 50 weeks before that, we saw double-digit increases. Now we're at single-digit increases for 21 consecutive weeks. All right, so that's asking prices. Let's have a look at housing inventory because this is a very big change over the past month or so. Because last week, inventory only increased by 31.4% from 2022. This, by the way, is the smallest increase since early October last year. Also, this is half of the gains we saw from just 2 months ago. So for example, for the week ended February 11th, we saw a 68% increase of housing supply. Now we only see a gain of 31%. What's interesting about this as well is that year-over-year changes of inventory have been on a downward trend ever since mid-February this year. And this is likely due to the fact that new listings have been decreasing for nearly 1 year, which is absolutely insane. A lack of people listing their house for sale, which is causing housing inventory to actually plateau or actually decrease over the past 2 months. And more on that here in just a little bit. So that's inventory levels according to Realtor.com. Let's have a look at Altos or AltosResearch.com because based on my own analysis here, inventory levels based on their data increased by 40% from 1 year ago. This is interesting because the year-over-year changes have been decreasing because last week I reported a 47% increase compared to the previous 12 months. And again, this is likely due to the fact that new listings are not hitting the market as much as compared to the past couple of years here, which is of course decreasing housing supply overall. Also, as a note right here, inventory has been on a downward trend since November last year, despite increases on a year-over-year basis. And this of course is entirely abnormal because inventory levels should be increasing in March and April, and of course, especially in May, but we're not seeing that this year. Also, as I note right here, we have approximately 40% more house for sale compared to 2022. However, compared to pre-pandemic levels back in early May 2019, we have approximately 53% fewer houses for sale. So here's a look at inventory levels according to AltosResearch.com. As you can see right here, we have more houses for sale compared to 2022, and of course compared to 2021. I'm ignoring 2020 because that was really impacted by COVID lockdowns than anything else. But looking at early May of 2019, we had 896,000 houses for sale, and inventory levels were increasing starting in March. Whereas this year, we only have about 420,000 houses for sale. Also, have a look at this, because when I zoom in for inventory this year, or inventory changes this year, here's what it looks like here. So inventory has been on a downward trend for the most part this year. As I reported to you guys, 2 weeks ago, inventory was increasing for 2 consecutive weeks there, but the most recent week, which is the week ended May 5th, inventory levels dipped once again, which again is entirely abnormal because back in 2019, for example, which is right here, inventory levels started to increase back in March that year, going from 824,000 to 896,000 by early May of that year. And as I mentioned, the reason why we have historically low inventory levels, especially compared to 2019, is this right here. New listings decreasing by double digits for 38 out of the past 41 weeks. On top of that, we've been seeing fewer new listings for 44 consecutive weeks. And this means we've been seeing fewer new listings dating back all the way until July last year, which is absolutely insane, which is causing housing inventory levels to remain at historically low levels. So that's new listings. Let's have a look at how fast or how slow houses are selling, because days in the market was an increase of 16 days. In other words, it's taking 16 days longer to sell a house compared to the same time frame last year. On top of that, homes are taking longer to sell compared to last year for 40 consecutive weeks. Again, though, a friendly reminder, this is based on closed home sales. Therefore, this is a lagging indicator. Now, here's another interesting trend that's emerging as well, because the number of price reductions year over year have actually been on a downward trend. So for the week ended May 6th, there was a 35% increase in the number of price reductions in the US here. But this is more than half the rate we saw back just 4 weeks ago, when the gain was 79.4% year over year. So there's been a big drop over the past month here. It also has decreased in 12 out of the past 13 weeks as well. These smaller increases in the number of price reductions is likely due to declining inventory levels, historically speaking. So in other words, there's fewer options for home buyers and less competition for home sellers, and also that's leading to some bidding wars in some markets. So that's the changes we're seeing right now in the number of price reductions. Let's have a look at the share price drops. For the week ended May 5th this year, the share price drops was 29%. Going back to mid-November last year, that was more or less the peak. The peak was 43%. So from November through May this year, the share price drops went from 43% to 29%. And by the way, that decrease in the share price drops is entirely normal. That's our seasonal decrease in the share of price drops. But when looking at the past couple of years, the share price drops at 29% right now is at least a 2-year high. However, though, the share price drops at 29% is on par with pre-pandemic levels going back to early May of 2019. And you can see that right here. The share price drops right now at 29%, much higher compared to 12 months ago at 20%, 2 years ago at 16%, and back in 2020, the share price drops was 24%, but at 29% right now, this is on par with early May 2019, when the share was also 29%. Also going back to May 18th of 2018, the share price drops is also very close to 29% as well. All right, I know that was a lot to cover in today's video, so here's a summary for you guys with some additional insights as well, or information and insights, I should say. So number one, asking prices in the US only increased by 2.4% last week. That was the smallest increase going back to May of 2020. For comparison's sake, asking prices rose by 6.7% compared to the same week of 2019. Number two, housing inventory rose by 31% year over year last week, according to Realtor.com. However, though, it has been on a downward trend since November last year. It's normal for inventory to fall in the winter months, but of course, it's not normal to see decreases in early May. Also, as I mentioned here, there was a small increase in the previous 2 weeks regarding housing supply in the US, but that trend reversed last week again when inventory fell once again. Also, new listings have been decreasing by double digits for 38 of the past 41 weeks. This continued lack of new listings is causing inventory to stay at historically low levels, even though inventory is much higher now compared to the past couple of years. There's still approximately 53% fewer houses for sale right now compared to the same week of 2019. Number 3, the average 30-year fixed rate was around 6.5% as of May 11th this year. That's up from 5.4% from 1 year earlier. And number 4, the number of price drops from last year has decreased for 12 out of the past 13 weeks. The share of price drops is at a 3-year high during that same time frame, but it's on par with pre-pandemic levels right now. Number 5, houses are taking longer to sell compared to 1 year ago for 40 consecutive weeks. So what's some potential huge changes ahead given the fact that rates have been at or above 6% ever since September last year, which is absolutely insane. And a friendly reminder, I am not a real estate market fortune teller. If I was, I would tell you what's going to happen, but it's anyone's guess. But I'll give you some context or some analysis regarding, based on the data we have today, what should we expect in the months ahead here. Number 1, average 30-year rates are about 1 percentage point higher compared to 12 months ago. So for comparison's sake, back in late October 2022, when rates were about 7.4%, that was an increase of approximately 2 percentage points compared to the previous 12 months. Also, the Federal Reserve has been increasing the federal funds rate going back to March of 2022. However, this week, they signaled a pause in future rate hikes. We likely won't see mortgage rates skyrocket like we did last year, which of course caused a very sharp pullback in prices and home buying demand as reported last year. Lots of challenges are ahead right now, though. We have bank collapses, record low housing affordability, low inventory levels, elevated rates to say the least, as well as a potential recession, and of course, job losses coming potentially as well. In other words, a lot of uncertainty. Number 2, housing affordability is still a big issue, especially compared to the past couple of years. Mortgage rates have been flat overall over the past 1 month, paid at around 6.5% on average. However, though, on a national level, home prices have been increasing since February. So home sold prices, according to Redfin, or according to my own analysis of Redfin's data, have increased by about 8% over the past 2.5 months. And number 3, early signs of home buying demand have been absolutely all over the place based on the fact that rates have been very volatile this year. However, though, based on the most recent stats we have from the MBA, which was published on May 10th, they reported that applications for home loans to buy houses increased a whopping 5% compared to the previous week. However, though, when looking at pre-pandemic levels, we're at the lowest levels for housing demand based on applications for home loans going back to 2015. In other words, demand is still very low. Also, Redfin reported on May 11th that pending home sales fell by 16% from 12 months ago, and new listings fell by 19%. So low demand is meeting low supply, making it feel like we have a competitive housing market in some markets. And of course, this is leading to bidding wars in some marketplaces due to low inventory levels, historically speaking. Also, according to the National Association of Realtors, also reported on April 27th last month, pending home sales fell in March down by 5% compared to February and down by 23% compared to March of 2022. In Sacramento County, where I live and work as a real estate agent, based on my own analysis here, we're getting about 3 offers per property on average. Compare that to 1 year ago, we're receiving around 6 offers per property. So even though we have a bidding wars for some houses. The bidding wars we are getting right now are not nearly as bad compared to 2022. Also, our housing market this year appears to be highly rate dependent. So data coming in is ever changing, making, of course, very challenging to report the latest housing market updates here. And of course, a friendly reminder, real estate is local though, right? Number 4, sellers and buyers have exited the market, leading to a dip of new listings as well as pending home sales as well. The lack of new supply or lack of new listings since last summer has led to inventory remaining at historically low levels. We're down about 53% compared to May of 2019, for example. If homeowners continue to decide that now is not a good time to sell a house, that will limit inventory levels and, of course, put upward pressure on prices further. Again, though, a friendly reminder, this seasonal uptick in demand that we've been seeing so far this year is not anything like the first half of 2022, where home prices and housing demand were absolutely skyrocketing. And number 5, I appreciate you guys watching this video and, of course, for supporting my YouTube channel. Hope you guys have an awesome day and look forward to seeing you on the next video.